This is Christian Farmer at Trade Group, and this is your end of day market recap for Friday, November 14th. Quite a move there in terms of where we were this morning to the first couple hours of the day. Very strong bounces that we saw, and a lot of that coming in really the most beaten up areas of the last couple days. Solar, clean energy, uranium stocks. All of these were these areas, and I would also include high growth and some of the AI trades as well. These areas were down huge pre-market. I remember I always take a screenshot of what's going on pre-market, and I think we had 50 names, and these are all large cap names, all over $5 billion, that were down like at least 4% on the day, which is a much normal, much larger move down in a lot of names pre-market, and a lot of these names were down 6-7% as well. So it looked a pretty decent washout, and hence on the open today, we just saw, I think a bit of short covering, a bit of kind of oversold conditions in some of these areas of the market. So I thought that was kind of interesting. And then of course, like once you have that move up, it's, are you going to get follow through? And to tell you the truth, I didn't really like how we closed, and I'm going to kind of give you a little bit of my thoughts going into next week, because I have to run out the door, and I'm traveling a little bit this weekend. But I wanted to go over just exactly what we saw, and if you look at the carnage that has been that you've seen in some of the high growth areas of the market. And I know I've been talking about these ETFs a lot the last couple of days, but it's such a dramatic sell-off in this group. The IBD 50 ETF, even though it squeaked out a gain today, I think it was up 0.5% today. It was down. It's down 15, almost 16%. I'm just going to enlarge this so that you can see this. 16% for the month. I mean, that's a pretty fast drawdown. And I measured this from the highs to the lows for the IBD 50 ETF. It's about a 23% drawdown from the highs to the lows. That's coming very fast. And I posted this on social media earlier today. Just the fact of, let's see if I can find it. Let's see if I can find this chart for you. Yeah, so it's about 22% drawdown. The correction that we saw in earlier in the year, so February to April, essentially was the high point in the IBD 50. Then it saw a 33% drawdown. So it's really not. I mean, that's another 10% away, but it just shows you, that was based on a lot of tariffs, and there's always different reasons for movement, moves down. But to me, that's a significant drawdown. And again, it's a situation where I think just a lot of rotation. I think I was talking about yesterday, if not yesterday or the day before, in video, where I was talking about stretching a rubber band really far, and I think that's what happened in a lot of the high growth AI names, and that's a significant snapback in terms of that. So let's look at a couple charts, because again, I want to go through this kind of quickly today, because I have to hit the road. But SPY. So this is where I kind of want to get into what I think is going on with this market. So number one, um, notice the size of these candles that you're seeing right now, right? These intraday moves. Compare that to a couple months ago, right? This was a very low volume rally up, which is usually how rallies happen, especially when you look at the indices, right? It's their low volume rallies. Once the volume begins to pick up, that's when you know that you've got distribution on your hands. But to the point about the size of the candles, this looks like something is changing here. It looks like there's just more volatility. There's more of a tug of war. If you go back and if you look at some of these other dips, and these were very minor dips back into here, but they were just that. They were shallow dips. Here, it's more of a distribution situation. So that's one observation I think to make from this price action in SPY. Number two, we're kind of, since we rallied from the beginning of this week, but we stalled, and we did not. We made a lower high here. Hence, I have this trend line drawn here, and we're heading back down, testing the 50-day moving average, second time this month that we're testing the 200-day moving average. And that begins to be a little bit of a problem. The more that you come down and test something, if you keep hanging around that area, you're more susceptible to breaking that area. Now, do I think that that happens, right away? Well, I don't know. And I don't really like to make predictions. I like to just kind of follow the price action, pick up whether or not we're seeing like a strong tape or if it's a weaker tape or what areas are leading, what's going on under the hood. Those are the things that I generally help me summarize the market. But I think what you could kind of gather here is that maybe we're coming down, like this is more of like a triangle pattern, back and forth, back and forth, back and forth. And then we're going to break this triangle pattern one way or another. And it does worry me that this could begin to break lower, just because there's just a lot right now. There's a lack of conviction, I think, in names. So I think what you saw today was one hell of a bounce. But looking at the cues, for example, it's even more. It's even more, I would say, troublesome here. We did close above the 50, but barely. I mean, not by a lot. And both of what, and the other observation, by the way, is we did not get outside of the value area. We tried to reclaim that value area and intraday, both spies and the Qs, and we did not. IWM, right? So this is what a lot of charts are beginning to look like, especially like more in the growth space where you've broken the 50-day moving average decently. And today, nice, you had a significant bounce from where we started for the day, up 0.3 of a percentage point. But look at how this is kind of buried below the 5, the 20, and the 50-day moving average, right? We're now kind of trending down, like that's now bending down. And again, that's what I see in a lot of higher growth names. I was looking at, for example, like Robinhood, but again, you could go through your charts and you can kind of see, but this is another situation. And I like Robinhood. I've been a Robinhood bull for a while. I still have this right now in the TTG trend portfolio, but to me, this is going to take a while to kind of heal this. You don't have a 50-day, so a 50-day break of the 50-day moving average is a change in trend, especially when you've been honoring this trend for a while. And we've been above this since April, but notice how deep we are below that 50-day moving average. So, even if we rally another 2 days, like there's a good chance that we could get rejected here. So that to me means to kind of change the thought process around, I'm what I do is I'm a swing trader. But in this market, it's getting very difficult to swing trade things because the way things are going, even if you go back to the cues, which are holding up better, you just have to be very quick. You get a move, and you need to be selling into it. And if you're adding in the wrong spot, if you're like thinking that, okay, a green candle is good, we're turning, we're going back higher. Right now in this market, it's too wishy-washy, where that could really hurt you if you're adding on green days. Um, so that's the environment that we're in now. What could change things a bit? Well, what could change things is, or at least could help the situation out. Um, let me just bring up this chart. All right, so this is Fed Fund futures, and I've gone over this, I think, a couple times over the last couple days. But essentially, what it's showing you right now is that we're less than 50% chance that is this is what the market is pricing in, that we're going to get a rate cut in on December 10th. So it's not zero, right? So it's not completely priced out. There's still some hopes that they're going to cut interest rates in December 10th, but this is partly why, and I've said this probably every day of these videos for the last week or so. This is why you're seeing IWM and a lot of high growth names, or at least one of the contributing factors, why they've legged down. Right, the market has come to grips that the Fed may not be cutting interest rates in on December 10th. And again, that really stemmed from Powell coming out on in the last Fed meeting a couple weeks back and saying that that was not necessarily in the cards, not guaranteed that they're going to cut interest rates. IWM began to move down from that point and has continued to move down as the probability has decreased. Because again, this was at like 60% like a week ago. So so that's what we've got going on here now, is that the market at this point really desires another rate cut. And the expectations going into that last Fed meeting, it was close to 100% chance, and hence the market has had to reconcile that. So a couple things, being that this is almost 50%, if they don't cut, I would anticipate. Let's go back to our triangle right here in SPY. Right. So we come to the end of this point, maybe that wraps up in a couple weeks. Fed decides that they're not going to cut interest rates. We may start to move to the downside. The market could anticipate that further if we hear some other statement where they say that they're probably not going to do it. Then the market will probably tend to move to the downside before that happens. But again, you can kind of see what's happening there with IWM and a lot of growth stocks. So the question is, we saw value outperform this week, but it's almost like a flight to safety a bit, a move into this. And I like trading some value stocks. Like I have no problem, trading healthcare. And some biotech, as well as some of the metals names. But I will for number one, like why it's harder to make, it is harder to make money in value stocks because they don't move as fast. It's also associated like more with a little bit of risk off. Now here's one chart that I've been focused on over the last couple of days. I don't think I tweeted it out, but I've been watching it. This is low volatility with high beta. This has been a massive underperformance for low volatility equities. This is USMV, but you could also use SPLV. That's probably the better one to use. SPLV versus SPHB, and you could see that this is trying to get going here. Um, and it's been massive underperformance by low volatility. So hence you're kind of seeing some reversions to the means. Growth stocks come down and they've come down fast, hence that IBD 50 ETF, and some of the movement back into low minimum volatility equities as well as value stocks. Energy stocks still kind of look pretty decent. I've profiled these a couple times. Exxon closed around the highs, right? This is what the market likes right now. I'm in Exxon. I'm in some Fang, which again is trying to break higher after a little bit of some backing and filling here. Let's see if this gets going. I do really, it's probably one of my favorite charts, but there's other names, smaller cap names in energy that are looking pretty good. Right? I think this is par specific. So if you want something that's more trending, that's the way to do it. I will say this: what I think is one encouraging sign, not to be so negative, is what's going on with biotech. Now, biotech was up almost 2% for the day. There was a deal in biotech today, which biotech loves deals. This is an equally weighted ETF, so it generally does go up when there's a deal in the space. But this is more risk on than just pharma stocks, which I've talked a lot about this week. They kind of stalled a little bit. They got a little bit ahead of themselves, so they kind of came back in a little bit. But there's certainly stars in this group. Eli Lilly has been one of them, very strong. So we know that it's the end of the week. Monday has been seeing these growth risk on moves in the beginning of the day, where there's kind of FOMO over the weekend. If that happens again, it might be a day, if you're still holding some growth stocks, to kind of think about what you want to do with those, and maybe selling into those, considering that that's the market that we're in right now, is that we're kind of going back and forth with some of these stocks, but a lot of stocks are leaning lower. Just a couple other, I'm not ignoring growth stocks at all. I would have liked this BE to get outside of the value area. I mean, this is a big day, 8%. So if you bought the dip on the 50-day moving average, not bad. That's a heck of a move, and that's what this market is giving you right now. It's giving you these big intraday moves. So rather than, one of the points that I'm trying to make in this video is, rather than trying to trade what you like to trade, and what your game plan is, you could either adapt to what the market is giving you, which is a lot of intraday volatility and opportunities to make money both on the long side and the short side. I shorted Qs yesterday and made some money in the beginning of the day. Um, Or if it's not for you, then you can kind of sit on your hands and be patient. Trade a few value stocks here and there, and be extra select. Sorry, extra selective in some of the high growth names. Sorry, I'm listening to Bloomberg Squawk in one ear. I did go long some CLS. I said the top of the value area. If it didn't hold that, I would get out of it. It held it, but it held it, so I did hold on to that one. Google, I traded earlier on the day. I did not hold it, even though it did hold the 50-day moving average. It just couldn't. Oh, well, something's going on here after hours. Maybe it was the data centers, but nice pop there for Google. So no, I'm not in it anymore, and there it goes. But it is what it is. Guys, have a great weekend, and that's my thoughts going into next week. While this is going on, making adjustments is what really helps. Showing that drawdown in FFTY and all those high growth stocks, I think that kind of just helps to kind of uh, indicate how vicious some of these moves down have been over the last couple weeks. And if you're playing some defense, then you probably have fared better than what the IBD 50